What's up, everybody? Welcome to the Stocks channel. My name is Cory, and this episode is going to be your stock market weekly update for the week ending 8/7/2020. Before we get into it, don't forget to smash that like button and subscribe to the channel to keep up with all of our technical analysis videos. Now, first off, we're looking at the ticker symbol SPY, which is our S&P 500 ETF. So let's crack open this chart and see what's going on in the stock market this week. All right, so remember, we have a lot of bullish momentum in the S&P 500, and we're expecting to see the price come up here and test the last all-time high at this $338 level. Now, we didn't have a great day on the S&P 500 on Friday, but we did close the week out with a lot of strength because we didn't go into negative on Friday, even though tech had a terrible day. Now, that's a great sign to see the S&P 500 actually go up a little bit on Friday, even though technology sector had a bad day, which shows that the other sectors are showing some strength, and the S&P 500 isn't just depending on technology to go higher right now. So if we flip over to a 1-hour chart, we see that our previous resistance did act as support as the price got right down here to this $332 level and bounce, which is extremely bullish to see resistance act as support. And we're seeing that now the S&P 500 is continuing to hold up above this $332 level, which is exactly what we expected to happen, to see a bounce off of 332 and ultimately bounce and come up here and test 338, which is the previous all-time high. Now, if we see a break of 338, that's a new all-time high, and that's another very bullish indication that this market is going to continue to run. If we get to a scenario where we come up to 338 and get rejected, people are going to start talking about a double top scenario, and that's something we'll have to look at if that scenario plays out. But also remember, we have these two gaps below us just from 1 week's worth of price action. So any bad news is going to cause this market, which took the stairs up, it's going to want to take the elevator down and close these gaps very quickly if there's any reason for the stock market to correct. So there's still a lot of risk in this market. Even though it's very bullish, there's a lot of potential as well to have a very sharp correction that could go very quickly. But right now, all the technicals point to bullish, and there's no reason to believe that this trend is going to reverse until we start seeing this 5 EMA show some weakness and start heading to the negative direction and possibly cross under the 13 EMA. We're trading on the top of the Bollinger Band, which again is very bullish, and there's a lot of momentum in this market right now. So we're going strictly with the technicals, and we see a very sharp upward trending 20 simple moving average, and we see the moving averages in a very bullish stack up, with all the moving averages breaking up to the upside and starting to create separation with the 5 and the 13. Again, there's a lot of momentum in this market, and it looks like it's trying to get to its previous all-time high in a hurry. So if we break 338, we're still looking at this 1x Fibonacci extension level of 341, and that will set us up for the precedence of where the new all-time highs will start heading. If we break the $341 level, we'll give you another upper price target, but right now that's the price target we're shooting for. So if we jump over the Nasdaq 100, we see we had a terrible day on Friday with the market ending down about 1% on the Nasdaq. We also have this large gap below us, just like the S&P 500, and it looks like tech is going to be the first sector to start cooling off here. But remember, one day doesn't set a trend, so the fact that tech had one bad day doesn't mean that it has to start coming down more just because of that. We're still looking at tech to come up here and test this $280 level with any more upside, and we still see a very bullish trend with the price trading above the 5 EMA, and the 5 EMA still well above the 13 EMA. So right now on the Nasdaq 100, we're still watching to see this bullish trend and this bullish momentum take us up to a price target of 280 before ultimately coming back down and closing this lower gap before heading higher. If we jump over the VIX, which is our fear indicator, we had another lower close on the VIX on Friday, closing down around 22.2. So remember, anything below 23.5, which was our support level, shows that there's fear leaving this market, and the closer the VIX gets to closing this gap and heading back down to this $18 level tells us that we're going to see new all-time highs because there is no more fear in this market. Now, during the crash, there was a lot of fear, and we saw the VIX spike up to absolutely astronomical numbers, and now the VIX has been on a very solid downtrend ever since, which shows us that fear is ultimately leaving this market, and when there's no fear in a market, prices continue to be bullish and head higher. So we see the VIX aligning with our theory that we're going to see new all-time highs, and there's no reason to believe otherwise until we see reversals in these trends. So let's jump over to some of the other sectors, and we'll start out by looking at the financials, and we can see that the financials broke out to the upside, which is what we were expecting based off the industrials breaking out to the upside a few days prior. So we see here we were in a consolidation wedge pattern, and we also broke out above that wedge pattern to a new high, forming above this horizontal line that you see here. So now what we really want to see the financials do is continue this trend to the upside, break above and close above the 200 simple moving average, and then ultimately form a higher high on this market, which will be all of the confidence we need that this is a real deal breakout. But right now, this is enough information for us on the technicals to say that this is a bullish breakout, and I'm going to continue to expect to see strength in the financials and see a test of this 200 simple moving average at a minimum. Now, when we get up to the 200 simple moving average, we'll see if it acts as resistance and we just come up here and get rejected and start heading back down. However, right now, I'm giving the benefit of the doubt to closing above the 200 simple and breaking out to a new all-time high as we see this market continue to show bullish signs all around. So overall, a great week for the financials, and we're finally seeing some signs of life show in the financials, and we're seeing some bullish breakouts, which is a great sign for the S&P 500. Next up, we'll look at the industrials, and we see another monster day on Friday with the bullish momentum starting on 8.5 and continuing to close out the week on a high note. So on the industrials, we already saw us break and close above the 200 simple moving average, and now we see all the moving averages breaking above to the bullish stack up side, where we see all the simple moving averages closing above and now showing bullish trends. So on the industrials, we're already breaking the bullish trend of being below the 200 simple moving average, but we would also like to see a new high formed and the price to close above this previous high so that we also form a higher high on this market. But again, this is a super bullish trend, and it's a great breakout to the upside on this consolidation wedge pattern as well. So we see that the S&P 500 actually went up on Friday because of the financials and the industrials, not because of technology. So that is a change in what we saw before, where technology was always going up and industrials and financials were still in consolidation pattern. So we're seeing somewhat of a rotation out of tech and into financials and industrials, which is healthy for the stock market. Think of it as money managers rebalancing their portfolios, and they're selling the strongest assets to buy some of the weaker ones. So obviously tech has been performing the strongest, so we're more than likely going to see money rotate out of technology and flow into financials and industrials and other things like consumer cyclicals. This is healthy for the stock market, and it's a healthy rebalance, and it tells us that this bull run is a real deal when we see all of these sectors moving up together. So jumping over to the healthcare sector, we do see somewhat of a trend break because we had this nice upward trend, and we see the price close below that trend for 2 days in a row now. However, that is not the end of the bullish trend. It could just be doing like what we saw here, where the market went sideways and really didn't go anywhere while it was consolidating its gains and getting ready for the next leg higher. Now remember, this is still a bullish trend as long as we have the 5 EMA above the 13, and we're also trading well above the 20 simple moving average, which we see has been acting as support for 2 or 3 days now. So as long as this 20 simple moving average has this nice positive upward slope and this very strong bullish momentum upward attack, the healthcare are still very bullish. Now it is taking some time to consolidate its last leg up, but that is also healthy price action as we see the price movement digesting before getting ready for its next move up. So in order to see weakness in healthcare, we need to see the 5 EMA start to go negative and close below the 13 EMA, and ultimately that'll tell us that there's a trend reversal. But right now we don't see that, and we still see very bullish price action all around. Jumping over to the dollar, it's still starting to look like the dollar found its bottom, and we're still waiting to watch to see if this is the end of the dollar's drop and we're going to start heading back up. So remember, if we see strength return to the dollar, we expect to see other assets start to correct and not necessarily continue to inflate, as we've seen with silver and gold and stocks. Now if we jump over to a 1-hour chart on the dollar, we can really see that this level down here has been acting as support, and now we're starting to see higher highs and higher lows forming, which is a sign of a trend reversal and possibly showing that the bottom is in. So on the 1-hour chart, we had a solid bullish engulfing candle that closed above the 200 simple moving average, and we see these moving averages are starting to cross to the bull side, and we're starting to see them all cross over to the positive side, which is showing that there's bullish momentum entering the dollar and that the dollar may have found its bottom around the $92.50 level. So we'll continue to monitor the dollar, but it is looking good for the dollar that it may have hit a bottom and it's ready to reverse. So we'll keep an eye on that. And remember, the stronger the dollar gets, the more likely we'll see corrections in asset prices. So because the dollar had such a great day on Friday, we saw a small correction in gold and also a small correction in silver. And remember, that is to be expected. As we see the dollar return strength, we're not going to see gold and silver continue to run up in this parabolic fashion. All right, let's jump over to Apple. Since we're covering Apple until we see a correction, we did see see Apple leading the way on the tech correction on Friday, which is to be expected after this monster move that we had. Now we still have these two gaps below Apple, and I'm still waiting to see Apple come down here, close these gaps, and then get ready for its next run up. But right now I would not be a buyer of Apple, and I'm actually watching Apple to be the market mover in the lead for the correction. So as we see Apple come down to close these gaps and correct, we would also expect to see a cool down in the Nasdaq 100 and the S&P 500. However, as we saw on Friday, the S&P 500 doesn't necessarily need technology because the industrials and financials are showing strength, and those can carry the S&P 500 higher even if Nasdaq 100 and technology are correcting and heading lower. So the FOMO in Apple could be coming to an end, and as people realize that Apple has reaching a top, you will start to see people stop buying it as heavily, and you will actually see some profit taking, which would be more than likely close these gaps and get ready for its next leg up. So the Dow Jones actually closed up the highest on Friday, which is another sign that we're seeing a rotation in the sectors as we see money moving into industrials and out of technology, at least in the short term. Now the Dow Jones is also trying to form a higher high, so we're waiting to see the Nasdaq try to break out above this previous high and form a closing price of a higher high, which will be another bullish indicator. But again, it's really good to see all of these sectors and all of these indices moving together in the bullish pattern to the upside, because it tells us that this is the real deal move. So if we jump back to the S&P 500, we had a solid week and we had a solid close on Friday to confirm the moves that we saw. So we're still waiting to see the price target of 338, and I think that could get there in a hurry, especially if short sellers start getting squeezed. We could see a melt up and the price continue to go higher very quickly. Remember, there is risk in this market and nothing's a guarantee. So there could be any scare in the market could easily drive this thing down to close these lower gaps, and from Friday's close that would be a drop of about 2.5%, and that could happen in a hurry. So while there is risk in this market, there's still very bullish sentiment and very bullish technicals that we're watching here, and there's really no reason to try to call the top on this market and try to short this market by any means. So that's the update for this week. Please remember to smash the like button if these videos help you out, and if you like following along on these technical analysis videos, go ahead and subscribe to the channel right now so you can keep up with all of our updates. So thank you for watching the video, and as always, I will see you in the next episode.